Hey YouTube, this is Todd Horse with Tasty Tracker. Today I wanted to talk about why I trade options. So first up, we'll talk about what options are, and basically they're insurance for stocks. Somebody can buy insurance and somebody can sell that insurance. And as you can imagine, if the stock goes down that you've invested in and you've purchased insurance on that, you could potentially recoup some of those losses that you would normally experience. So when considering which side we want to take, uh, using the insurance analogy, we all know how rich the insurance companies are. And it's the same thing here, where in the long run you can have more consistent, albeit slower, growth if you're the option seller. So selling gives you a high probability, but the trade-off there is their lower profits. But you can define your risk and reward. So if you want to make a little bit more money and lower your probability of success, you can do that. All of the stats are in your broker, and you'll know at the time of getting into it what your chances are of profitability. And that does go for buying or selling, but typically when you buy, you have a much lower chance of probability. I'll talk about that more in future videos, so you don't need to get caught up in the terminology or the context of options just yet. But the main reason I got into options was because I invested a bunch of money, we'll say $500 to start off with in Robinhood, and I invested all of that 500 into stocks, and then I sat there and I waited and I waited and I waited, and a lot of days the market's going completely sideways. Sometimes it's going down, then it comes back up, but not even to the level that it was at before that you bought at. So if you were to sell those stocks, you're not making any money. Uh, Again, I was looking for more of a trading strategy instead of investment. I wanted to make some side money. So yes, I could have kept it in there, and eventually they would rise to the point at which I bought them, and so I could get out for zero, but that's not even talking about making a profit. So you end up wasting a whole lot of time watching the paint dry and nothing's happening. Options allow you to make a whole lot more money more quickly, and we'll get into that in a bullet point here. But before that, when you're getting in options, the reason you're probably watching this video is because there's a lot of different variables with options. For stocks, it's not really hard. It's what's the price at now? Is that more or less than what I paid for? And then you can sell. Yes, you can get into indicators to try to predict where things are going to go, to make your trading more efficient. But in the end, none of that is too complex, especially when you wrap your head around it. I probably traded stocks for about 3 months before I gave up, and although I was profitable, I wasn't happy with how little gains I had, even though, yes, I was beating sort of the market average return. It wasn't close to what I was hoping to get. That said, a lot of people have a misconception that you'll get into options and you'll immediately become rich. That's definitely not the case, at least for the majority of the people. The people that are making these huge sums of money and posting about it online are not posting all of the times that they lost money. And so you get a very up and down type of account where one day you're up 5,000, next day you're down 10. And that's not really conducive to how I want to live. I want to be able to make consistent profits, smaller profits, but continue to move in the right direction. So how are they more profitable? Well, they're leveraged. So for every option contract that you buy or sell, you're actually leveraging 100 shares of the underlying stock that you're selling or buying the option for. So a very small movement in the underlying stock, and you'll have a large movement, or at least larger, in the option price. So that leverage is what allows you to invest a very small amount of money and have a much better return on investment. So, in stocks, you're trying to get out for 5 or 10% maybe, And with options, you're routinely getting out 25, 50, or 75% ROI on that position. Obviously, then the realization there is because you can make money that quickly, you can lose money quickly too. So we'll talk about that in a minute. The last reason I like options is there's a strategy for any situation. So just like I was talking about how you're sitting and watching the paint dry with stocks, in a sideways market, you can have an option strategy that allows you to, let me move my head here. It's not covering up too much, but there we go. Yeah, so there's a strategy to, if you want the stock to go sideways, there's a strategy if you want it to go down, there's a strategy if you want it to go up. And so you're constantly making money in any direction, in any market. If you sink $10,000 into the stock market just buying stocks and the stock market crashes, you could sell out, but then you're going to lose a lot of money. So most people end up holding and then just foregoing any profits that entire time. Option traders can make money the entire way down, sideways, up, and end up in a much better place, especially if they're reading the market signals appropriately and can prepare for that downward movement. You can short stocks so that you could play up or down, but you can't really play sideways too well. So I just have that in parentheses there. Okay. So I do have some advice. I started off with about $3,000 and went down to about $1,200 on my initial account before I really got the hang of things. And I was able to not blow up my account, which you'll hear a lot of people talking about on the internet, blowing up their accounts and blowing up multiple accounts. Again, those are typically people that are buying instead of selling. But regardless, I did have a phase where I was buying a lot of options before I figured out that was not the way I wanted to go. So anyway, so I got down to about $1,200, and then I was able to get my account back up to and above what its initial value was. So what I'm recommending here, though, is you start off with $1,000 and basically expect to lose it. Obviously, you don't want to. You want to do everything you can, but the point is that you want to limit yourself and your exposure and protect you from yourself so that you don't lose all of your money at first. If you only have $1,000 to work with, yes, it's not 100% realistic in what you'll be trading in eventually, but it's at least something to get your feet wet, determine if you like it, and build the skills you'll need later on. I do make a note here, you need to keep at least $500 in reserve. So even though that's half of what you have here, and what am I supposed to do with $500? We will get into that later, how you can still trade options with $500 and less. But you really need that cushion there for a variety of reasons. Basically, anytime you're rolling positions or you need to take advantage of a good opportunity that pops up. And that's a classic rookie mistake, to have everything invested and not have any money available to you. So anyway, after about 6 months of trading, you'll basically begin to be successful. And that sounds like forever, but if you're not interested in doing this as a business, as long-term, then you really don't need to waste your time getting into this and trying. It does take effort. It does take time. So if you want to jump in and think you're going to make $25,000, it's never going to happen, and you're just going to lose your money. So stay away. But if you do have the determination that this is something that you're interested in, then after about 6 months, you'll start seeing success, and then it does snowball rather quickly. But you need to make sure you make it that far. So if you blow up your account, then you're not going to make it to the 6 months through that period, and that's where they say where 9 out of 10 traders end up quitting. After that, I went to a $15,000 account, which works out great. You're less restricted on the different positions you can take, and obviously the bigger positions are more profitable and you can do more advantageous positions. At that point, then you want to keep about $5,000 in reserve, again, for opportunities or rolling, etc. But when I changed from my $3,000 account to my $15,000 account, there was a learning curve, and again, I dropped that account from 15 down to 12 and a half. And again, now I'm up over 15, and I think that all happened within about a month and a half, 2 months total. So the learning curve on that is much shorter, but it is different handling a $15,000 account than it is handling a $3,000 account. But as I said before, you need to keep the reserve. It's not a joke. At first, I was warned to keep the reserve, and I just said, why would you keep money when you could invest all that and start making even more money? Well, especially at first, since you don't know what you're doing, you're going to end up losing that money. And on top of that, you really do need to keep that money for a variety of reasons, and we'll cover that in a future video. The one downside I wanted to talk about with options trading is with stocks, you can sort of buy your stocks and go on vacation if you need to or whatever and forget about it. With options, they have expiration dates, so you need to be on top of what's happening all the time. So I don't sit down and stare at my screen by any means. However, I do check in a couple times a day to see what my positions are at, where the market's moving. And when I'm preparing to go on vacation, the week or 2 or 3 before, I'll start scaling down how many positions I have open, so that way I don't need to monitor so much on a day-to-day basis. But basically, I'm saying here there are no down days. So that's basically it. If you have any questions, you can definitely leave a comment. I do have broker links with their associated affiliate links for me. If you could use one of those, that'd be great. If you're interested, do all the YouTube stuff, share, comment, like, subscribe. I do have a year's worth of videos coming up, so check back next Friday. And then, as always, my website is Tasty Tracker, where you can track your stock and option trades. It has a lot of neat features that the brokers don't have, such as a break-even calculator, dividend assignment risk calculator. It handles rolling options, which I'll cover in a later video, which right now basically no broker that I'm aware of handles nicely. It has some analytics, it has a diary. There is a free demo, so you can just go check it out. You don't need to put in your email or anything. Just put in the demo account, play around with it, see how you like it. And I do have a referral program for my website. Unlike a lot of the other referral programs, I won't just give you a one-time payment, but I'll even pay you every single month that you have users signed up underneath of you. So you can go ahead and read more about that on the website. It's only $9.90 a month, $9.99, which is much cheaper than I think than a lot of other solutions out there. And it's a modern UI that's usable on your phone or laptop, tablet, etc. So I have a disclaimer here. I'm not going to read it to you, but I'm not a financial advisor, so these are all just my opinion. Thank you, and have a nice day.